Joining us, Dave Mazza, CEO at Round Hill Investments, home of the MAGS ETF, MAGS. Dave, good morning.
Good morning. Thanks for having me.
Absolutely. Tesla back in the magnificent category after this?
I would think so. Look, the stock has had really a tough ride over the longer term, really struggled post the disappointment with the robo-taxi event. But with last night's earnings report, I think the dream premium can live on, certainly exhibited everything that investors were looking for, especially with more clarity that the 2025 new vehicles weren't going to get pushed out and that there was an improvement again in margins, right? That has been an overhang in the stock. Last quarter was a super disappointment. They did note that it's going to be maybe hard to keep on to the number that they reported, but it's just so much better than we were. And what that does is just takes all that kind of garbage and uncertainty out of the name and puts back, really Tesla in a place where now investors can trade it and maybe even say, hey, this makes sense to re-enter for a longer term position.
Not bad for margin improvement on the vehicles, making its way up to the total gross profit, the margin of 20%. I mean, looking at what we just saw for General Motors, it's right on par, and that's impressive considering all the other stuff Tesla's doing in the meantime. So it's like that margin seems to suggest that they've got enough flexibility financially to keep making these moonshot moves with some of the other products. I mean, that kind of gets you to the valuation to some extent, right?
Well, yeah, so here's the thing. So Tesla got a huge reality check with the slowdown in EV sales, right? With the EV winter, we know the excitement there was toward EVs. They've been the leader. They're actually profitable in the space. And as Musk said last night, name another EV company globally that's able to do that, and you can't. But look, the challenge is at the end of the day, they are a car company. And if people were buying less of their cars, their valuation suffered. But you're absolutely right. I think because now we see a path toward improvement in vehicle sales in 2024, potentially 20 to 30% increase in 2025 with new models. Cybertruck is now profitable. Then your moonshot idea can come into play, and now we can actually continue to see valuations really be detached from reality, but in a way that investors have come to expect, because what those valuations for is for changing the world, for robotics, or for whatever may be coming next.
I think this gives them more of a pass to continue spending on those efforts, because that's what the cynics basically have hated. They've said that, this is too big of a stretch, it's too far down the timeline, and P.S. Elon, get off the campaign trail. Does all of this, do these numbers kind of suggest he's able to multitask these things?
Yeah, look, so here is the reality. So the valuation of Tesla, in my opinion, for maybe forever, has never really been directly connected to the amount of vehicles they're selling or telling you they're going to sell. It is purely connected to the future, something new, and that could be the cybercab, it could be the semi, it could be droids, it could be anything. Now, I think there are some valid points about how stretched Musk is. I think shareholders maybe have a right to be concerned about the amount of time he's spending on the campaign trail, spending on X, spending on SpaceX, and any other businesses that he has. Now, he would say that's all accretive to his time in understanding the world. So I do think there's a reality that at some point we may need to have more clarity on what a potential transition plan could be, but he bought himself a lot of time with a quarter as strong as they just reported.
The potential for Tesla then to kind of compete within the category of these big winners, especially when we consider that the AI trade has basically separated the winners from the laggards in the Mag 7. Do you think this closes that gap to some degree, Dave? Should Tesla be appreciated then if they've got the financial wherewithal to dabble into the AI world while still maintaining car margins? Should they be in the, AI theme?
Yeah, we don't, in our chat ETF, for example, we don't own Tesla. So we don't necessarily think that it right now belongs in sort of the generative AI bucket. With that being said, they are working on AI. There's, of course, a connection there, and I think at some point there could be a logical case to be made there. But we still view it really in an area of it's a little bit of in a world of its own as a stock, right? We know for years it did its own thing, much of it to the upside. The last year it's been doing its own thing and it's been pretty negative, not a great looking chart. But if we now can move above the 50-day and have support here at these higher levels, then I actually think, particularly if we get strong earnings, which we're expecting from the rest of the Magnificent Seven and other names like that, then we're going to have this really bulled up sentiment to end the year. Now, of course, the election's on the horizon. We can't really kind of put our foot fully on the gas until we have some clarity there. But at least out of Tesla, we had a lot of good news, and that's a huge positive for the name.
Yeah, I'm with you. Good stuff, good report. Thanks for the analysis, Dave. Appreciate it.